Trump's deadline just ran out. He told Iran, "Open the Strait of Hormuz by 8 p.m. tonight, or you'll be living in hell." He posted on social media Sunday, "Open the fucking strait, you crazy bastards, or you'll be living in hell. Just watch." Tonight at 8 p.m. Eastern, we find out what that actually means. And your money's future this week depends heavily on the answer. Here's where the world stands right now. Markets spent Monday frozen. The S&P 500 barely moved, up just 0.23%. The Dow added 60 points. Oil is sitting at $111 a barrel, up 66% since the war began on February 28th. It's a three-way standoff. Trump is waiting for Iran to blink. Iran is waiting for Trump to back down again. And markets are waiting for either of them to move. But here's what's changed since the last 4 deadlines. This one has a ceasefire proposal on the table. Pakistan, Egypt, and Turkey are making a last-ditch mediation push. The proposal, a 45-day pause to the fighting, and reopening of the Strait of Hormuz. Neither side has agreed yet. But for the first time in this war, there's a specific deal on a specific piece of paper that both sides have seen. In this video, I'm going to break down exactly what tonight's deadline means, what the 3 possible outcomes are, and what each one does to your money, and why Wall Street is actually starting to look past the war, and what that tells you about where we're heading. The deadline, what's actually on the table tonight. Let me be completely direct about what tonight's 8 p.m. deadline actually means, because the media coverage is confusing it. Trump's ultimatum says Iran must open the Strait of Hormuz or face what he called Power Plant Day and Bridge Day, all wrapped up in one. He threatened to destroy Iran's power plants, bridges, and oil infrastructure. He also told ABC News that if Iran doesn't make a deal, their whole country is gone. And on Fox News, he said he's considering blowing everything up and taking over the oil. But here's the most important context. Trump has extended this deadline 4 times already. Markets have largely stopped pricing his threats literally. As Bloomberg strategist Tatiana Darie put it this morning, traders are largely shrugging off Trump's ultimatums for Iran to reopen the Strait of Hormuz, given their underwhelming track record so far. So what makes tonight different? 2 things. First, the ceasefire proposal is real. Mediators from Pakistan, Egypt, and Turkey have been working through the Easter weekend on a 45-day pause proposal. Trump himself called Iran's recent proposals a very significant step on Monday, even while saying they weren't enough yet. Second, the politics are closing in on Trump from his own side. Former Representative Marjorie Taylor Greene, who'd previously been a Trump ally, posted after his speech, "All I heard was war, war, war. Nothing to lower the cost of living." His own approval rating on the economy is now at 31%, and this is a midterm election year. The political pressure to end this war is now coming from inside the House. Here are the 3 scenarios for tonight, and exactly what each one means for your money. 3 scenarios and what each one means for your money. Scenario A. A ceasefire deal is reached tonight or within the next 24 hours. Even a preliminary framework, a 45-day pause with Hormuz monitored but partially reopening, would trigger the largest single-day rally of 2026. Oil would fall sharply. Analysts at one firm estimate Brent crude drops toward $85 to $90 within days of a credible deal. The S&P 500 could gain 3 to 5% in a single session. The sectors with the most snapback potential, airlines, down 20% in March, consumer discretionary, and mid-cap tech. For long-term investors, this is the moment you've been waiting for. For anyone holding cash, this is when the opportunity cost of staying out becomes painful very quickly. Scenario B, Trump follows through on bombing threats tonight, full escalation. If the U.S. strikes Iran's power plants and bridges, Iran will almost certainly retaliate across the Gulf. Saudi and UAE infrastructure comes back under attack. Oil spikes. Goldman Sachs' worst-case target of $147 per barrel becomes the short-term conversation. The S&P 500 falls sharply. 5 to 8% in a single session is not unreasonable. This scenario isn't priced by markets right now. The S&P is only down about 4% from its January high, which means investors are broadly not pricing a full escalation. If scenario B happens tonight, the drop would be fast and severe. Scenario C, another extension, more ambiguity. This is actually the most likely outcome based on the past 6 weeks of pattern. Trump extends the deadline again. Markets stay range-bound. Oil stays between 105 and 115. Grinding, headline-driven volatility continues. For investors, this is the "you need more patience" outcome. Uncomfortable, but it's the scenario that preserves your current positioning best. Here's what's critical to understand. Even scenario C, another extension, is actually less bad than it sounds right now, because the ceasefire proposal exists, the mediation is happening, and Strait of Hormuz traffic actually picked up over Easter weekend. 35 ships transited over the long weekend, compared to essentially 0 for weeks before that. The direction is improving, just not fast enough for markets to call it over. Wall Street is starting to look past the war. Here's what that means for you. Here's something that got almost no coverage today, but matters enormously for your investments. Despite oil above $100 for 40 days straight, despite 5 consecutive weeks of losses in March, despite the worst quarterly performance for the S&P 500 since 2022, analysts expect S&P 500 earnings to grow 13.2% in the first quarter of 2026. That would be the 6th consecutive quarter of double-digit earnings growth. That number is remarkable given what's happened this quarter. Companies kept hiring, consumers kept spending despite $4 gas, corporate earnings held up. And not a single major Wall Street bank has meaningfully cut its 2026 earnings estimates since the war began. Here's what Carson Group's chief market strategist Ryan Dietrich said this week, and it's the most important investor framing you'll hear. "We've withstood so much negativity and everyone is so worried. Maybe that beach ball under the water gets some good news and that ball can go up." He's right. The S&P 500 is only down about 4% from its January high. The market is not pricing a catastrophe. It's pricing prolonged disruption. And the moment that disruption shows signs of resolving, the beach ball comes up fast. Here's what you should be watching this week beyond the Iran headline. Delta Airlines and Constellation Brands report earnings Wednesday. Q1 GDP and the PCE inflation reading, the Fed's preferred inflation measure, come Thursday. These numbers will tell you, for the first time with hard data, how badly the Iran war actually damaged corporate America's Q1. If earnings hold up and GDP doesn't collapse, the bull case for a recovery gets significantly stronger. For investors watching tonight's deadline, here's the honest playbook. If you're sitting in cash wondering whether to act, the moment to act is not before we know the outcome. The moment to act is when the outcome is clear. A ceasefire deal provides a clear signal to add. An escalation provides a clear signal to reduce risk. Another extension means you stay patient. What you shouldn't do tonight is make any large portfolio moves based on rumors or early reports in the heat of the moment. The first reports of ceasefire deals and breakdowns in this war have been wrong multiple times. Wait for confirmation. Here's where we are right now. Trump's deadline is tonight at 8 p.m. Eastern. A ceasefire proposal, 45 days with Hormuz reopening, is on the table. 3 nations are mediating. Trump himself called Iran's proposals a very significant step. 3 possible outcomes. A deal. Markets rally 3 to 5%. Oil falls sharply. Airlines and consumer stocks snap back. Escalation. Oil spikes toward 147. Markets fall 5 to 8%. Extension. Grinding volatility continues. Beach ball stays underwater. S&P 500 earnings are still expected to grow 13% in Q1. The economy hasn't broken. Corporate America is holding up. The bull market isn't over. It's just waiting for the war to end. Tonight is the biggest single moment of the Iran war for investors. Watch it. But don't react to the first headline. Wait for confirmation. I'll be back tomorrow with the full reaction. If today's breakdown helped you understand what's at stake tonight and how to position yourself, give this video a like and subscribe to Global Finance Market News. We'll have the full reaction video tomorrow morning, the moment you need it. Hit the bell so you don't miss it. Everything in this video is for educational and informational purposes only. This is not financial advice, and I'm not a financial advisor. Please always do your own research before making any investment decisions. Past performance is never a guarantee of future results. Always consult a qualified financial professional before investing.